We are with Adam Cochrane, General Retail and Luxury Equity Research at Deutsche Bank. And we talk with him about the luxury and fashion market. And can we understand how it's changing from your perspective? What trends do you see in this market?
Yeah, thank you. It's a pleasure to talk to you today. I think over the last 12 months, it's been a really difficult time for the luxury market globally. I think as we spoke a year ago, we were probably looking forward to a recovery in the second half of 2024, but that didn't materialize. In fact, in many ways, it got worse as the year went on. First half of this year has pretty much started off in a similar fashion. So we're probably looking at a low to mid-single digit decline in the first half of this year for the personal luxury goods market, really driven by an ongoing decline amongst the Chinese consumers. There's been a bit more volatility within America, where post-Trump election you saw a big pickup in spend, but that has faded relatively quickly as we've gone into early 2025, given the concerns over tariffs and other bits on the industry. I'd say looking forward, we are probably looking at a better picture in the second half of the year than we've seen in the first half. But overall, if we maybe saw a 2-3% decline in the industry last year, maybe it's flat in 2025 overall, with first half down, second half up, before we're looking for a recovery as we're looking into 2026. So overall, I think a pretty muted picture, but the industry has learned some lessons. You've seen a lot of changes within the industry, and we're looking forward to a slightly better second half of the year and into 2026.
Oh, thank you. The industry take a good lesson, but the economic scenario is very uncertain, from tariff to interest rate. What are in your opinion, the areas of the world that will continue to develop fashion and luxury better?
So I think in the short term, the countries and regions which are doing the best is definitely the Middle East. Maybe there's some short-term political uncertainties, but the longer-term attraction of the area has been very strong. South America doing well. I think the big uncertainties are really the US and China. The question there is this a cyclical downturn that we've seen in the Chinese consumer, or is there something more structural with regards to their consumption patterns within the luxury space? I think at the moment the view is that it's a cyclical downturn that you've seen in the luxury segment after a very strong period, 2021, 2022, post-COVID. You saw a strong pickup in the luxury demand in that region, so maybe a bit more muted there. The US, I think, has been an area of growth for the industry, and maybe that's the one area where we might see a little bit more of a pickup looking forward once we've got through this tariff uncertainty. In terms of the main determinant of luxury spend, it's not the global consumer being particularly weak, not having a lot of money. It's the confidence, the lack of confidence to spend that we really need to see changing. So I think as we look into the second half of the year, maybe, as you say, interest rates coming down, looking like it should be a boost for things like equity markets, for the property wealth in certain areas. So I would suggest that you'll see a slightly more buoyant luxury market on some of those factors. The one area that's held up maybe better than people would have expected has been the domestic European consumer. So the problem for luxury in Europe has really been the lack of tourists coming from China, and then maybe a bit of volatility for US tourists coming in, given the weakness of the US dollar compared to the euro. But for the domestic European consumers, it's actually been reasonably stable. So overall, what we need to see in order for things to get materially better is this recovery in the Chinese consumer and maybe a further strengthening in the US consumer.
You say that the European consumers are stable, okay? But the confidence is an engine very, very important for the consumer. Do you believe that this confidence in the second half of the year will be growing up?
So I think for the European consumer, it's going to depend quite a lot on a number of factors. But first of all, you've got what happens with tariffs, whether the European Union can come to some agreement with the US, given the impact that might have on some of the export-led industries and the GDP growth accordingly. I think other than that, the picture for the overall European consumer should be starting to get slightly better. So I think the one bit to bear in mind is the luxury consumer is not always a perfect correlation or benchmark to the overall consumer. What you are seeing within luxury is the high-end consumers still willing to spend. The weakness that we're seeing, as I said, partly is due to tourists, but partly it's this aspirational, so the cheaper end of the luxury market, whereas those guys are still not really coming back, and they're declining their spend compared to where we were before. So there is a question mark for the luxury sector as to what do they do about this aspirational customer. So you've seen significant price increases over the last few years amongst the luxury products. So is there a chance that they can start to re-engage with those aspirational consumers? It won't be via price cuts, but it might be via the introduction of lower price points, different categories, to try and re-engage those aspirational consumers. So yes, I think consumer confidence is impacting some of their spending, but I would say at the higher end of the luxury, if you look at the more premium brands, their sales are holding up much better.
In Italy, there is a big industry about fashion and luxury. What do you believe?
So there's a couple of challenges that we're facing at the moment, I would say. First of all, the question that some consumers are having with regards value for money within luxury. Now, that's because you've seen price increases probably higher or faster than maybe the consequent increase in quality of the products that are being manufactured. But there still is a significant view that products made in Europe are of a higher quality than they are made in the rest of the world. So that value still maintains. One thing that the luxury industry has got to be, you've noticed it, that the big companies are purchasing more and more of their suppliers. They're trying to consolidate their supply base. But on top of that, they have to really show consumers the heritage, the value, the reason that you're buying these Italian products, whether that is because the raw materials are of sufficient quality, the craftsmanship is of a high quality. All of these bits need to be reinforced to make sure that the made in Italy or made in France, made in Switzerland tags that go with these products and that gives them the premium that they're charging is maintained. But I think there is a real challenge for the industry to make sure that they, one, buy up the supply chain and do it in a way that manages to keep all of those skills in the area that they are, reinvest in those areas, because I think there's always a danger when there's a slight slowdown in the industry that the people that pay the price are those within the supply chain rather than necessarily the brands. But you have to make sure, and I think some of the companies are doing this, make sure that the supply chain is supported so that the growth when it comes back can be achieved via those same factories and suppliers.
Thank you for your analysis and also for your optimism. Thank you.
Thank you.